Hello learners, and welcome to our today's learning session. We continue learning, and in our today's lesson we want to start on a new segment, that is the ledger, and it's just a continuation of recording transactions of a business. We started earlier on by saying that first the transactions are recorded in what we call source documents. We have seen how to record transactions in source documents. After recording transactions in a source documents, then the information recorded in source documents is transferred to the books of original entry, which we also said are known as the journals. Today we will shift our attention to the ledger, which is the next step in the recording of transactions of a business. So we will begin on by looking at the ledger. And by the end of this subtopic or unit, you should be able to do the following. By the end of this unit, the learner should be able to one explain the meaning and purposes of the ledger. Then number two, you should be able to explain the concept of the double entry. Then number three, you should be able to explain the meaning and format of a ledger account. Meaning and format. Number four, the fourth objective, is to explain rules. Should be able to explain the rules of recording business transactions in the ledger accounts. Number five, by the end of this unit, you should also be able to record business transactions. Should be able to record business transactions in the ledger accounts. Number six, you should be able to balance. After recording, we do what we call balancing. You should be able to balance off ledger accounts. Should be able to balance off ledger accounts. Number seven, you should also be able to extract the trial balance extract trial balance from ledger accounts. Extract trial balance from the ledger accounts. Number 8, by the end of this unit, you should be able to explain the purpose, should be able to explain the purposes and limitations of the trial balance. By the end of this unit, you should be able to explain the purposes and the limitations of the trial balance. Number 9, should be able to classify accounts. Should be able to classify accounts. Then lastly, you should be able to discuss various types of ledgers. That is what we intend to do. The purpose, the aim of this unit, the ledger, is to enable you be able to explain the meaning and purposes of the ledger, explain the concept of the double entry, explain the meaning and format of ledger accounts, explain rules of recording business transactions in the ledger accounts, record business transactions in the ledger accounts, balance of ledger accounts, extract trial balance from ledger accounts, explain the purposes and limitations of the trial balance, classify accounts, and discuss the various types of ledgers. We have 10 objectives to achieve. So let's begin. We are going to begin by explaining the meaning of account, what is an account, and what is a ledger, and what is a ledger account. Now, before I explain the meaning of an account or the meaning of a ledger, earlier on I had mentioned that there are many transactions that take place in a business. At the same time, you'll find many transactions taking place. You have the business making purchases, at the same time selling to customers, paying employees, checks are deposited in the bank. The business at the same time is writing checks to pay suppliers. The business at some point pays rent to the landlords. There are many transactions that take place in the business: buying fixed assets, disposing fixed assets, selling on credit to customers, purchasing on credit from suppliers. So business transactions take place at the same time. So there is always need to have these transactions being recorded properly. Such transactions have to be recorded properly. And when talking of even buying assets, the company may be buying motor vehicles at the same time, buying equipment at the same time, buying stock and all that. So there is need to have these transactions being recorded properly in the books. Now, so I want to explain the meaning of the ledger. Meaning of the ledger. I've just said there are many transactions that take place in a business, and these transactions need to be properly recorded in the books of accounts. Now, an account, let me write, an account, abbreviated as AC, is a chronological record, is a chronological record of all the transactions, transactions affecting a particular item, So there has to be an account for every item. If you are saying, for example, cash, there has to be an account where every transaction related to cash is recorded in that record. So an account is a chronological record of business transactions that are related to a particular item. Cash, as we learned earlier, is an asset. There are many categories or types of assets, different items of assets, like the debtors. We have assets like motor vehicles, equipment. We have stock. There are other assets like buildings, and so on. So there are transactions that affect the asset cash. There are certain transactions that affect only debtors, and even within these debtors, you may find a business has 10 debtors, 20 debtors, 500 debtors. So there has to be an account for each and every debtor. A debtor is an individual or a company that owes another business money. So there has to be a record for each of these items. When, for instance, there is payment of cash, then that payment will be recorded under the item known as cash. So an account is a chronological record of all the transactions affecting a particular item, and the record shows the increase or decrease in value that occur in the particular item, I've given an example of cash. When payment is made in cash, or there is cash that has been received, all those two examples of transactions are affected or recorded in the cash account. So an account is a chronological record of all the transactions affecting a particular item. The record shows the increase or decrease in value that occur in the particular account. Now, the book of accounts, where the transactions are recorded, is known as the ledger. The book of accounts the book of accounts where the transactions are recorded, is known as the ledger, or just call it the ledger book. The ledger book, the book of accounts where the transactions are recorded is known as the ledger or the ledger book. So a ledger or a ledger book is a book of accounts, a book of accounts, a book of accounts is a book that contains many accounts. For example, I've given an example of, say, debtors. For example, if you have debtors, debtors is general. A company may have a debtor known as Amina. A business may have a debtor known as Yusuf. Another one, Nebuchadnezzar. So these are three debtors. And remember, debtors are companies or individuals who owe the business money. In most cases, the business may have supplied goods, but these businesses or individuals have not paid. They owe the business money. And we say that an account is a chronological record of transactions affecting a particular item. So this is one item of debtors. This is another particular item of debtors. This is a particular item of debtors. So the business will maintain an account for Amina. It will also maintain an account for Yusuf. The business will maintain an account for Nebuchadnezzar. So each of these debtors will have an account. Which is a record of chronological events, so that when goods are supplied to Amina, then under Amina's account you indicate that this value of goods have been supplied. When Amina pays, that payment is reflected in the account of Amina. When the business gives Amina, say, discount, then that discount is shown under Amina's account. The same applies for Yusuf, the same applies for Nebuchadnezzar. So all these debtors, these are accounts. This is an account, this is an account, this is an account. So you may find that when we say a ledger is a book of accounts, then that means that the company will maintain one book where all the accounts of debtors are maintained. It can be just a book like this one. So that on page 1 of this book, you'll have Amina's account. And shortly I will be showing you the format of an account. So there'll be an account, Amina's account, so that when the transactions affecting Amina are being recorded, they are just recorded under Amina's account. On the second page of this book, you have Yusuf's account. Yusuf's account will appear on the second page. On the third page, you'll have Nebuchadnezzar's account. So this book that contains accounts of debtors is what we are referring to as a ledger book. A ledger book. And the accounts that appear in this ledger book are known as ledger accounts. Ledger accounts. So a book of accounts where transactions are recorded is known as ledger book. So this is, I've given just one example. A business will have different types of ledgers. This is just one type of a ledger where it's a book that records the accounts of debtors, accounts of debtors. The business will have another book where the accounts of creditors are maintained, another book, another ledger book where the accounts of creditors are maintained, so that when there is any transaction affecting any of the creditors, then that should be recorded in that ledger book under the ledger specific or particular ledger account. So that is very straightforward. The record shows, we are talking of, I've defined an account. I've also defined a ledger book. I've said an account is a chronological record of all the transactions affecting a particular item. For example, Amina is an item, Yusuf is an item, Nebuchadnezzar is an item, and so on. So that is the meaning of account, and also the meaning of a ledger, So I want now to give the format of an account, having said that all transactions pertaining to a particular item are recorded in one account, and I've also said that all the accounts are kept in the ledger book. So I can go ahead and show the format of an account. So candid learners, an account, this is the format of an account. An account, candidates, takes the format or the shape of letter T. It takes the shape of letter T. There are two main sides to account, and under this format, there has to be a title. An account must have a title. Let me write title. At the middle of the account, we'll have the title. The title is simply shows the name of the account. Then an account will have on one side, we'll have a column for the date, a date column. Then we'll have a column for the details or particulars. Then there'll be another format known as the folio column. Then we'll have another column known as the amount. So that will be one side. Then another side again, we start with the date, details, the folio column, and a column for the amount. So we have that column, then there is a column there. This is one side, then another column begins, another column, have it, column. So I've just said there are two sides to an account. There are two sides, and these sides are separated by this double line. It's a double line here to show the demarcation. So there are two sides. The left-hand side is known as the debit side. Debit side, abbreviated as DR, starts from the date up to the amount. Then the side, the right-hand side starts with the date here and amount, and is known as the credit side. Credit side abbreviated as CR. Abbreviated as CR. This is an account. So number one, the account has to have a title. This title indicates the name of the account. I gave examples. You have Yusuf account, Nebuchadnezzar account, the cash account, the bank account, the motor vehicle account, the equipment account, purchases account, sales account, and so on. So those are accounts. Now I will now give the going to explain what do we mean by debt details, what's the meaning of folio, what's the meaning of amount, debt details, folio, amount, so on. An account learners has three basic features. That is the title, the debit side, and the credit side. Then, other than the three basic features, there are the columns. You can see here we have the debt column, the details column, the folio column, the amount column on one side of the account. Then we have again the debt column, the details column, the folio column, and the amount column on the right-hand side of this account, which is known as the credit side. So this is the right-hand side, this is the left-hand side. So let's explain the purpose of the columns. First of all, we have the debt. Let me have columns. These are columns. We have the one, the debt column. The debt column. What is the purpose of the debt? The debt column. Now the debt column is used to record. It's for recording the debt of each transaction. It's for recording the debt of each transaction, and just for any other record that you maintain. I know some of you have diaries. If you have a diary and you use it to record your personal matters, then there has to be a date, okay? There has to be a date. And just for the same purpose, it helps know which transactions took place at which date. So that is the date column, and it's on both sides of the account. Then there is the particulars or details column. Number two, the details column. The details column. What's the purpose of this details column, which appears on both sides again? The details column, it is for the details column, it is for recording the name of the other account affected by the same transaction. Affected by the same transaction. We'll be learning later on this one here when we be discussing the double entry system. Every transaction is affects two accounts. So the details column will indicate the name of the other account affected by the same transaction. That will learn in our subsequent lessons. Then there is the folio column. Number three, the folio column. What is the purpose of the folio column? The folio column's purpose is for cross-referencing. It is for cross-referencing. It is for cross-referencing. For cross-referencing. That is, it is used for recording. It's used for recording. It's used for recording the location or we can say the location or the page number. That is the page number in bracket, the page number of the other account affected by the same transaction. So here you write the name of the transaction, the date when the transaction took place. You write the name of the other account affected by the same transaction. The folio number, you record the page number where this other account can be located. Cross-referencing. Cross-referencing. Then we have number 4, the last column is the amount. The amount column. What is the purpose for the amount column? Is for recording the value in monetary terms involved in each transaction. The amount column. It is used for recording the value, and that value is recorded in monetary terms, amount in shillings, in dollars, in rands, and so on. So that is the format of an account. Number one, I've said an account is presented in the format of letter T. There is a demarcation here, and there are 3 main features to an account. Number one is the title, which is the name of the account. Then there is the left-hand side, which is known as the debit side, abbreviated as DR. Then we have the right-hand side, which is known as the credit side, abbreviated as CR. Then I've explained the purposes for each and every column. There are 1, 2, 3, 4 columns on each side of the account. 1, 2, 3, 4, then 1, 2, 3, 4. That is the format of an account. And learners, that will mark the end of our today's lesson, where I introduced the unit, the ledger. I've explained the meaning of a ledger. I've also explained the meaning of an account. I've just said a ledger or a ledger book is a book that contains accounts, is a book of accounts. And the accounts that are maintained in the ledger, record of transactions maintained in the ledger, said are also known as the ledger accounts. I've gone further to explain the format of an account. I've given the purposes of the different columns that appear in an account. So that will mark the end of our today's lesson. I want you to go through the video again. Take your time, go through the video, understand what you are doing. When we meet next time, we continue learning more about the ledger. Bye-bye.